Welcome back, dear learners, from the ad break. In this session, I'm going to be talking about donations and drawings. What are donations and what are drawings? Drawings of stock, this is when the owner takes trading stock for own use. This will be recorded in the books at cost price. This is very important, that whenever we are recording drawings, we should record them at cost price. Now, remember, donations and drawings must be recorded at cost price. What are donations? Donations, this is when a business gives trading stock to welfare organizations or schools. So if there is a welfare organization within the area, businesses have a social responsibility to help their community. So they also give part of their trading stock, and we then call that donations of stock. And remember, donations are recorded at cost price in the books of the business. So we might be given the selling price of the donations or the drawings, but we are supposed to record the cost price. How do we record then these transactions in the general journal? Here we are given a transaction on the 31st, which says, the owner of Bell Traders took merchandise for his own use. So this already becomes what we call drawings. The selling price of the goods is 1,000 rands and the cost price is 500. Can I ask you a question? Which of these two amounts do you think we're going to record? The selling price of 1,000 or the cost price of 500? You remember what I told you a minute ago. Whenever we are recording donations or drawings, we record them on cost price. Now, let us see if we have somewhere to record. We will record them in the general journal. Let us start. When the owner takes goods for personal use, we call this drawings. So remember, drawings increases on the debit side. So I am going to debit my drawings, there you see, on the debit side. All right? But then my trading stock is decreasing because the owner is taking from the trading stock. So once your trading stock, which is an asset, is decreasing, you will then credit your trading stock. So whenever there's drawings, remember, you debit your drawings and you will credit your trading stock, which is decreasing in this case. And we have another transaction which reads, Mandela Children's Fund asked the business to donate goods. So remember, it is our social responsibility to also look for those that are in need. So we donated goods to Mandela Children's Fund. The business decided to donate 4,600, that is the cost price of the goods. We will come here now. Which account do we debit? We debit our donations. Hence you see here 4,600. Which account are we going to credit? Already you should know by now. The moment you are taking goods out of your business, it affects your trading stock. It affects your trading stock. So in this case, we're going to come and we credit our trading stock account. Once this has happened, it is very important now to know from the general journal, we will need now to post to the general ledger. Let us see if we're able to do that. Here is our general journal. These are the transactions that we recorded. You remember these first two and these other as well. When we are now posting into the general ledger, it is important for you to understand that your trading stock is an asset which increases on the debit side and it decreases in that case on the credit side. So we had stock, which is a balance now, 200,000. The moment he takes goods for personal use, that is drawings, minus 500. We need to remember in accounting that we have to complete the double entry. That means another account must be created. In this case, we have drawings. All right? So I'm going to come here. I already had a balance of 2,000, the drawings that were previously taken. Now, I have now taken 500. So you see, that my drawings is increasing now on the debit side. In this case, I have completed my double entry. I have credited my trading stock account, which is an asset. I have then debited my drawings account. The second transaction is now relating to donations. Remember the Mandela Children's Welfare. We donated goods of 4,600. And then in the trading stock account, we decreased our stock account. The double entry then principle means we need to have a second account. We will have what we call the donations account, which is in the nominal account section, an expense to the business. Your expenses will increase on the debit side. So we had a total already of 5,000, and then we'll come and we will add the 4,600. In this case, we are debiting our donations. I want us now to look at the effect of these two transactions on the accounting equation. Let's look at the first one. The owner of Bell Traders, it says again, that he took goods for his own use. Remember, we are recording the cost price and never the selling price. Remember that? We never record the selling price, but we focus on the cost price. Account debited, drawings. Once you debit your drawings, remember that it affects your owner's equity. Drawings decreases owner's equity. Once you have drawings, you come to owner's equity, then it's a minus. Hence you see here, minus 500. And then the account to be credited becomes trading stock, which is an asset and is decreasing. Therefore, you come to your assets, you find a minus 500. Let's look at the second transaction. The donation to the Mandela Children's Fund. The cost of the goods was 4,600. Remember, now we debit our donations, which is an expense. And our expense decreases owner's equity. Expenses decreases owner's equity. So you find we subtract minus 4,600. The second account, therefore, is your trading stock, which we are crediting. Crediting means we are decreasing our trading stock. Therefore, our asset is decreasing. Dear learners, we will go for an ad break. See you shortly. Welcome back, dear learners. Before the ad break, we're able to record drawings and donations into the general journal. Now we want to see what happens when there's a transfer between debtors and creditors. We'll now move on to the transfer between debtors and creditors. Now, you have to understand that it can happen that a person or an institution can be both a debtor and a creditor of the same business. In other words, we buy from a particular business and we also sell to that particular business. For this reason, a person or institution can buy on credit from the business, and the business can also buy on credit from that same person or the institution. In other words, there can be a situation where we can say, we owe them and they owe us. That is a situation that is possible in accounting. Once both parties have received their monthly statements at the end of the month or at the beginning of the next month, they can phone each other and make arrangements. So remember, they are our debtors. We have sent them a statement. And because they are our creditors, they will send us a statement. Then we will communicate now with each other, and then we can make an arrangement depending on the amounts that are owing. It is very important to note that it normally happens that the account with a smaller balance, that is the key part, the account with a smaller balance, that is, it can be a debtor or a creditor, is transferred to the account with a bigger balance. You will see when I do the figures together with you in this class. This means that both parties do not have to make payment. We will make a transfer between our debtors and our creditors. These transfers of balances are done in the general journal. So in this session, I will show you how to make such transfers. Let us see, we have a question here, and it says, information in the books of better traders. Here is our list of debtors, the debtors list. We have S. Nail, 380. We have Pronto Distributors, 4,200. And then we have B. Bower, 1,200. These are our debtors. They owe us. We also have a creditors list in the same month. We have Pronto Distributors, 1,250. We had this name earlier on. Do you still remember where we saw this name? Yes, in our debtors list. So it means Pronto Distributors is both a debtor as well as a creditor. Let's hear what they say. The following needs to be recorded in the general journal. Transfer the credit balance of Pronto Distributors in the creditors ledger to the debtors ledger. Let's quickly see how we can do that then. In the general journal, remember, the first key is to look for the account with the smaller amount. So where do you find the smaller amount? It is in the creditors list. And the smaller amount is 1,250. So we will now transfer 1,250 between our debtor and our creditors. Note the 4,200. We have to look for the lesser amount of the two. Remember, this is in the creditors ledger, in the creditors list, as well as this is in the debtors list. Which account then do we debit? You have to understand, they are our debtors, they must pay us. They are our creditors, we must pay them. How much must we pay them? We must pay them 1,250. There it is. We must pay them 1,250. But they must pay us 4,200. So we want to write off these amounts now. But again, remember, we write off using the lesser amount. We then will debit our Pronto Distributors. We are debiting our Pronto Distributors. Remember, we are now reducing the creditors amount. So we are coming now to Pronto Distributors, and we're going to debit it again in the creditors control. Once you debit in the creditors control, you are decreasing what you owe your creditors. So we are coming now to the creditors control, and we are decreasing it by 1,250. And the same must happen in our debtors. So we come again, then we say Pronto Distributors, then we credit. But we are doing this now in the debtors control. In the debtors control, there it is, in the debtors control. And then at the end of the day, you're going to have a credit amount in your debtors control of 1,250, as well as a debit amount in your creditors control of 1,250. What are the signs here? In the debit, this is a plus. On the credit, this is a minus. In the creditors control, on the credit, it is a plus, and on the debit, it is a minus. So in other words, we have decreased our debtors. They don't owe us 4,200 anymore, and we have decreased our creditors. We don't owe them 1,250 anymore. We have made a transfer between our debtors and our creditors. Let us see how this would be recorded in the debtors ledger. All right, here is in the debtors ledger. Remember, in your debtors ledger, on the debit side, it is your plus. On the credit side, it is a minus. So they are owing us 4,200. And once we make the transfer, we are decreasing our debtors now. So they end up owing us 2,950. If they are to pay us in cash, they'll pay us 2,950. And when you come now to your creditors ledger, remember your creditors ledger, it increases on the credit side and decreases on the debit side. We were owing them 1,250. Remember, that was the lesser amount that we used. So we will now come and debit it. We are decreasing it now by 1,250. At the end of the day, we do not owe them anymore. That is how we would record the transfer between your debtors and your creditors. Remember, key, look for the lesser amount. We will now move on to our general ledger. How would this affect the general ledger? Debtors control, you remember what I told you. This is an asset, it increases. On the credit side, it decreases. So you're going to have your general debits, general credits, because it is coming to the credit side. General credits, general, GJ, 1,250. And when you come to creditors control, remember it is a liability. It increases on the credit side, but it decreases on the debit side. So we have a balance of 150,000. This includes several other creditors. And then the amount that we have transferred, general debits in this case, which is from the GJ, 1,250. Let us quickly look at how this affects your accounting equation. Once you have the same scenario, remember, you are now debiting your creditors control. Once you debit your creditors control, you are decreasing your liabilities. That's why you see it's a minus 1,250. And once you credit your debtors control, which is an asset, you are decreasing your assets, minus 1,250. Is there any effect on the owner's equity? Definitely not. We'll go for a short ad break. See you in a while.